Here's what you need to know as we reach the end of the year and start preparing for tax time. If you had $600 or more in transactions on PayPal or Venmo, the IRS now requires, as of 2022, that payment processors and platforms such as PayPal and Venmo are required to send out a 1099 to any person whose payments total $600 or more through payment processors. Now, I'm going to give a very important disclaimer here. I am not a CPA. I am not a tax professional. I do not represent the IRS. I want to make sure that you understand that the information you're receiving here is from someone who is very good at researching, and I am pointing you to the resources listed in the description down below and encouraging you to contact your own tax professional. The IRS requires each payment settlement entity to send out a Form 1099-K to the recipient by January 31st. However, for those of you that are having business transactions, you are receiving income through third-party payment processors such as PayPal or Venmo, you are required to declare that income on your tax return and will be charged taxes on it. You'll receive a 1099 tax form from the payment processing system or platform. You'll then be required to take it to your tax preparer or enter it in yourself if you're doing your taxes by yourself. This income is going to be listed on your Schedule C of your tax return. You are then going to have it included in your taxable income. Make sure that you itemize any deductions that you are eligible to take for that income. So if you purchase materials, if you purchase products, if you purchase any services, software, insurance, etc., that went into your business or the making of that product, make sure you list those deductions on your Schedule C so that it reduces your taxable income. Now you're going to be taxed two different ways on the self-employed income. Number one is going to be regular federal and state income taxes. So whatever tax bracket you fall under, those tax rates are going to apply to this income. Second is going to be self-employment tax, which is 15.3%. Now, because self-employed individuals do not have payroll taxes taken out, including things like Social Security and Medicare, your income is also subject to a 15.3% self-employment tax. Now, many of you are wondering if this applies to personal transactions, such as selling personal property that you purchased years back and sold at a loss. If these are sold on a personal level and you are not a business entity, but you did profit, you will be taxed in Schedule D of your tax return. Now, many of you may have sold personal property, but you experienced a loss because you purchased the items for a higher amount than what you sold them for later on. The IRS will not tax you on personal items that were sold but it can be complicated on how to locate the answer on how to account for this in your taxes. The IRS states that you will have two entries. Your 1099-K will be entered into the income from sale of personal items, and then an entry stating the cost of those personal items that were reported on the 1099-K. These will then cancel each other out and result in zero taxable income. These are reportable on the section of your tax filing regarding capital gains, Schedule D, Form 8949. Now, the last thing that you need to know, what happens if you do not enter in this information? Well, those third-party payment processors are required to file that same tax form directly with the IRS. If you do not file it on your income taxes, then things don't line up and you risk receiving an audit from the IRS. This can result in you not only being required to pay those missing taxes, but also have them be subject to penalty and interest. Okay, you guys, I hope that was helpful in helping you to understand exactly what you need to expect come tax time if you received those payments through PayPal, Venmo, or other sites.